Hello everyone, this is Martin. Welcome back to another weekly video update. And this week we're looking at the trading opportunities and what the currency pairs could be doing for this week, April the 10th to the 14th. And last week was kind of interesting. We had two major news announcements, the FOMC on Wednesday, and then on Friday we had the non-farm payrolls, which always moved the markets quite a bit. And the theme for this week, because I'm going to refer back to those two news items, the theme for this week is that markets seem to favor the USD strength. And that way, and no, I'm sorry. The reason I say this, that the markets seem to favor USD strength, is because then when the non-farm payroll news came out on Friday, the economic news for the employment wasn't that good at all, and markets just went the opposite way. In other words, markets seem to ignore that. There are obviously some other political factors involved, but markets seem to favor the USD against the other currencies, and that's why we had some of the major currencies moving quite a bit last week. So this week, what we want to do is we want to watch them carefully for small pullbacks. But the general idea this week is to trade in the same direction as the strong moves of last week. Okay, that's what we want to do. Okay, before I get into the currency pairs, let's quickly review the risk disclaimer. I just want to mention that to all my traders from around the world, as well as fellow traders here in the Metro Toronto area, that this video presentation is for educational purposes only, even though I may suggest various different levels where you can get into trades. I'm doing this basically to educate you. These are things that I'm looking at personally, and I may or may not take those trades in based on the information that I present to you in this video. So as always, I'm trying to help you make independent investment decisions. So whatever you view this video, always decide on your own, decide your own risk, and decide if it makes sense. And if it makes sense, then go ahead and place the trade. Okay, so that having been said, let's go right to the charts. Okay, let's start with the Euro USD Daily. Here you can see last week what happened. We had a pretty good move to the downside, especially on Friday with the non-farm payroll news. And this is what I'm saying. I mean, the economic news for the employment situation in the States wasn't that good, and yet instead of the markets reacting normally, they reacted and actually favored the U.S. and gave them the strength to push this currency pair down. So you can see what happened here as of last Friday. We had a strong downward movement, and I see further downward movement. Take a look at the MACD line. You can see the blue line here. It is curling down. It is angling lower, and it's indicating further strength to the downside. We also have one red histobar here. So once it breaks this trend line, and take a look to the left here. I've drawn this long-term trend line. It may pull back, and this is what I said with the beginning of the video. Watch for slight pullbacks first. You may want to wait for a slight pullback and then look for selling evidence to the downside, and that's what we want to do. Basically, this pair is trending down. What we want to do is take a sell trade to the downside. Now, once it comes down, it should come down to the next support zone. Take a look to your left here. This support zone is drawn with this gray rectangle. So once it comes down here, you can look for a bounce off the support for price to go higher once again. Okay, and that could happen this week. So next, we get to the British pound USD. Look at this huge move last week. I mean, that was a huge move. Um, And now we are sitting at support. So we're trending lower. Again, take a look at the MACD line. It hasn't fully crossed the zero level. Here's the zero level, okay? The MACD histobars are certainly growing larger. Um, and that means the momentum to the downside is increasing. However, because of this long move, this big move on Friday, expect a pullback first, and that's what that's really the theme for a lot of these currency pairs. Wait for the pullback, and in this case, what we want to do is sell below 123. 50 if you believe price from here is just going to come down, but I would wait for a pullback first. And let me take my crosshair tool 12400, 124. So with a pullback, take a sell below 123.80, okay, on a pullback. Like I said, price may go up a little bit higher and then come back down. Okay, now what we want to do also is switch to the LEOD chart. You can see here price is almost broken, or pretty well broken the lower yellow line here. So there's a lot of move to the downside. It's broken through the trend line, you can see, and so I expect further downward movement. Okay, so but wait for a pullback first. So this is what we want to do. We want to wait for just a slight pullback and then you know take a sell trade. Okay. So that's what I see there. Let's take that off and let's switch to another chart. And after the British Pound USD, we have the Australian USD. Now, the Australian USD um, also has come down quite a bit. We are sitting at a confluence of the support zone in gray. You can see that right here. Also, we have the 100 SMA, and you can take a look at this previous swing low. So last week on the Sunday Monday trading with this black candle, we're basically sitting at the trend line acting as support, but then we broke through on Tuesday, um, came to the 200 SMA, a bit of a doji on the Wednesday, okay, because of the support. So the 200 SMA acts as major support, and in this case, because there was momentum. Take a look below at the MACD. At By this time right here, the MACD line already had crossed the zero, so now momentum is continuing to the downside. The histobars are getting larger and larger, indicating further downward momentum. And finally, price broke through below the 200. That could have been another area to get into a trade right there with this candle. And on Friday, of course, boom, it went down. So expect price to go down lower. But I would be a little bit cautious here. Wait for a bit of a pullback first. Wait for a bit of a pullback, and let's take a look here. So the pullback, you would wait is to see if price comes up above the 100 and then comes back down again, right? So that would be the evidence that you would be looking at. Or here you can sell below 0.7480. 0.7480 over here and break out to the downside. Again, take a look at the MACD, what's happening there. Let's take a look at the LEOD. Just again, quickly want to point out the great opportunities with this chart. The opportunity came, you see this candle right here? It kind of just sat or just below this trend line, okay? Here's the trend line just below the yellow line here. I would have gotten in right there, and that would have given you quite a number of pips. Well, the first profit target would have been the previous swing low here, and I've indicated that with this horizontal line. But eventually broke through, and it's on its way down further, I believe. Okay, so now we get to gold, and gold was trending higher, but it has hit a major resistance. You can see with the gray rectangle. That's my resistance zone as well. Take a look. The 200, 200 always acts as a um, important resistance or support level in any chart time frame, whether it's the daily, 4 hour, hourly, 15-minute, it doesn't matter. Whenever you see the 200, always be aware that that could be potential support or resistance. And you can take a look. What is different about this candle? Now, this is the candle on Friday. Take a look. Buyers bought price all the way up, and sellers prevented price from going higher and kept price really down low below the 200. So I'm going to say that sellers are in control. I believe price could come down a little bit further, which could certainly help the Australian USD in the short term. Okay. Um, well, when I say Australian USD, so if price is coming down here, that means that's going to um, weaken the Australian currency against the US dollar. So US dollar is stronger. Okay. Now we've got the New Zealand USD. Let's take a look here. Wow. Okay, last week it really moved down quite a bit. You can see as of the close on previous Friday with this red vertical line, you can see price has just kind of come down, down, and I believe it's going to come down even further down to the next major support level. Again, take a look at the previous swing low, previous swing low. Look at the left there. So this would be a major area. I believe once price comes down here, it's just going to bounce higher again and maybe go sideways. Okay. And finally, take a look at the MACD. Okay, you can see that the MACD line is trending lower. The histo bars are getting larger. So um, certainly, price is going to come down a lot lower first, and you could sell. I would wait for maybe a little bit of a pullback. Sell below 169.50 on a pullback. So wait for a pullback, and the price then comes back down further. If it passes the 69.50 level, then I would take a sell for sure. Okay, now we get to the USD CAD. Well, before we do that again, let's check with the LEOD. You can see the opportunity right here. This candle not only closed well below the yellow, but closed below the trend line right there. And you can see, boom, price just kept going down, coinciding, well, the confirmation here with this, the MACD right there. Okay, now we get to the USD CAD. And this pair, I believe, it's going to struggle a bit. It's right now going sideways. It is at the. I'm sorry. Let me switch that to the daily. There, that makes better sense. So you can see we're at the sitting at the support zone. We are with this candle. Sellers tried to bring it all the way down. Buyers brought it all the way up. Okay, so buyers are in control. Price is still above the 8. I believe price is going to go higher. And in this case, though, I would wait to buy above 134.30, 134.30 to the upside. Okay, which would be right about right about there. Okay, so let me just so above 134.30, I would expect price then to keep going higher, but it began just use caution. The next swing high is right here with this. You see that right here? That's the next swing high. So just have some caution with this pair. Here you can see the MACD is above the zero. However, see the blue line here? It is sideways, horizontal. So we are in a sideways movement right now. Wait for evidence to the upside. Okay, and this pair often coincides with what's happening with oil. So um, US currency was strong in its uptrend here. It was down a bit here. And the reason was, let's take a look at oil. You can see oil had been in a tear, had been going up and up and up. It's now above the 50, but I believe there's going to be a bit of a pullback first. I do expect further upward momentum for oil in a short term, which means the US CAD possibly could be coming down just a wee bit or going sideways, okay? Now we move to the USD Swiss franc. Wow, you look at this pair, one of the better pairs last week. Had a couple of really good days. It's above the 100, above the 50, above the 8 EMA. You see this little green line right there. That's the 8. The trend line is angling up pretty good, sloping up higher. We have one green histobar, so all systems seem to be go. Just expect maybe a wee bit of a pullback first, and but I believe it's going to go to the next, higher to the next major resistance area. Take a look at the swing high here. So it looks like you know, if you want, if you think price is going to go higher and you want to wait for a breakout, you could. You could buy above here a few five pips above the high of this candle, or wait for a pullback and then buy above 10070 after the pullback. So what that means, wait for the pullback and price then continues higher above 10070, then you can take a buy trade. That would be your evidence. Okay, and finally we get to what's after the USD Swiss franc? Well, we get to the US Japanese yen. Take a look here. I've drawn in this blue kind of a rectangle. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. 12 days of a sideways pattern. I mean, price here at this area right there did break kind of did break the major long-term support, but now it's ranging sideways. My bias is to the downside. However, it's got to break this level, like this ranging pattern first, and it could come then down to the next major support. This is the 200. Remember what I said about the 200? It not only acts as a magnet, but it's a very strong support on its own, and that's why I love moving averages. So if price breaks here, and if you believe it will, then watch price come down to this area right here. So you could take a sell below 109.90, 109.90, which is right there. Okay, and in the short term, though, price could, again, as in the theme of this presentation this week, price could indeed come higher first, back again to the zone, and then watch for a bounce to the downside. Right now, you can see the MACD is kind of flat to slightly angling up. There is slight momentum to the upside, so just be careful. Price in the short term could go up a little bit higher, but then watch for a bounce to the downside again. Okay, or it could just continue to go sideways for a while longer. So that's what I've got for this week. And if you're interested in learning more about my courses or information I have, just contact me anytime. You can email me, and looking forward to hearing from you. Good luck trading this week, and we'll talk to you again soon. Bye for now.